Thank you, Raymond. Thank you for this opportunity. Hi, everyone. Good. Well, it's morning my time, but I think it's evening over there. Good evening. My name is Damilola Thompson. I work at EcoVC Partners. EcoVC Partners is a seed and early stage venture capital firm. We invest in tech and tech-enabled startups across Africa, but we also invest in Africa-focused companies. So those typically are companies that are not domiciled in Africa, but are solving African problems. We have made over 37 investments to date. We're also looking to expand, to emerging markets and make, more investments. But we're, always very excited to support entrepreneurs on the continent, and we think that that will always be what we'll do. And we're looking to, add as much value to our portfolio companies and to the African, startup ecosystem in general.
Thank you, Damilola. This afternoon and morning for Damilola, we'll be discussing, startup financing in the post-COVID era, and then looking through the lens of a venture capitalist. So Damilola just introduced her firm, and it's one of the few native farms based out of Africa. And I thought we would focus a bit on how, investments might look post the COVID era. Dami, a good way to start probably is, we probably know that the pandemic has been quite polarizing in a couple of issues. What do you think might be the trends, or what are the emerging trends due to this epidemic?
So I think just to start, I think that the one that has been, right in front of us is in the healthcare industry. We think that even during COVID, and now that, it seems like COVID is taking a nosedive, there has been an emergence and a resurgence of healthcare-focused companies. So whether it's companies that are trying to provide PPE or companies that are developing some vaccine or test kit around, the COVID testing, or even companies that are trying to solve for the predictions of future healthcare pandemics like this. We think that there has been more focus on that, and we also see that the other things that we see is around telemedicine coming back, because I think telemedicine has always been there, but from what we saw, no one has quite cracked the code, and we think that there are still so many players in the value chain that make the telemedicine sector very challenging. Quite a number of telemedicine companies that we saw had closed shop because either wasn't sustainable, or there were just certain things were not being done as expected. And so we're beginning to see a resurgence of that, because not everyone, could access the hospitals, not everyone could go to the hospitals. And so there was need for more, virtual interaction between the patients and the doctors or the healthcare professionals, right? And even for people who did not necessarily need to see the doctor, they just maybe needed to see a nurse, or maybe needed to go to the pharmacy. We're beginning to see even more pharmacies enter, that virtual space now. So I think that is the first, I would say, impact of the COVID in the startup space. I think the second one, which had taken place before COVID, which we're beginning to see, is around trade financing. So if you all would know, the AU is trying to push for, members of the AU are trying to push for the Africa Free Trade, agreement that would allow trade amongst all, free flow of trade amongst all African countries, amongst all African citizens, and even just free movement of people. There has been, a lot of challenges also to implementing that. Not every African country had signed up for that initially. Every African country had signed up for that initially, and I think that initially affected the the implementation, if I could say that, the implementation of the agreements. But now I think that more and more, African countries are beginning to see the need to have a more united Africa, to come together as a united front to tackle some of the problems on the continent. But what we're beginning to see is a lot more companies that are trying to do trade financing, that are trying to enable, free movement of people across Africa, free movement of people and trade, so goods and services across Africa, making it, very unrestricted, very easy for people to do, and very organized. So we're beginning to see a lot of startups in that space. So from Kenya, and other countries in East Africa, and also in West Africa, we're beginning to see a lot of activities on that end. I think the third thing that I'll talk about is around blockchain. Blockchain, or actually cryptocurrency. This also existed, pre-COVID, but I think that COVID, the COVID era has also, helped to increase or jolt, the movement, or the need for a decentralized financial system that people can use, regardless of, whatever part of the world that they are. So what we typically have seen is that people who wanted to, either bring in money from outside Nigeria, or bring in money from or outside Africa, any of the African countries, will typically go on any of these crypto platforms, and then exchange their crypto for the country's denominated currency, and get that transferred to them. So we've been seeing a lot more activities, like significant activities on that end, from startups, and even just around the fundraising. So we know that a couple of them have been fundraising, and have got, significant attention, even from African countries. Sorry, from foreign investors investing in, cryptocurrencies that are based on the continent, because I think that it allows for people to be able to move money in and out of the continent, without restriction of, whether it's the CBN, or whether it's your, local regulatory organization, and that just helps to make life easy for a lot of people without having to go to the bank. Even the things around, transaction, costs are significantly reduced, because of, platforms like this. So I think those are on my list, those are the top three emergence, or things that have emerged out of the COVID era. Some of them had existed before, but there's been significantly more activities, also because people could not travel. So a lot more people, and as you all know, a lot of people are working from home or working virtually, and people need to get paid for services, right? It's still very difficult to get, dollar in. I'll just use Nigeria for an example, to get dollars in Nigeria, but it's easy for me to be able to get paid in crypto, and then I sell the crypto to someone else, and someone else pays me in my local currency. So that essentially has been what we've been seeing.
Thank you, Demi. You've touched quite a lot on a few trends. One that is quite interesting is you mentioned something about trade finance. How do you think investors are thinking about investing? Has there been a change to the terms that we're used to? Has there been a change to the term sheets? Are they more risk averse now? How does that look like post-COVID?
Yes. So I'm going to start from pre-COVID. So pre-COVID, terms definitely changed. So, you see a higher, so first of all, you see a higher liquidation preference, because people were unsure and uncertain about how long, the COVID was going to last. And some people, of course, as investors need to deploy funding, either way. So even if, there's some pandemic, every fund has a particular lifetime. So investors need to be able to deploy the funding within that particular period that the fund is active. Otherwise, it just doesn't tell well on them. But what investors had been doing is that you typically would get a higher multiple on liquidation preference. So typically pre-COVID, your typical liquidation preference is like 1x 1x liquidation, 1x liquidation. But now we're beginning to see more 2x or 4x, some of them even participating. I think the other thing that we saw was around certainly time for exits was becoming more predominant, now than pre-COVID. So this is typically something that you have with PE firms, but now we're beginning to see a lot more VC firms saying, I want to be able to exit at this particular time because I'm not sure what is going to happen. What if, COVID comes back? What if any other, pandemic comes to the world? I want to be able to get my money out as soon as possible. I'd say that the other thing is around just want to have to wait until when you break even or when you start making a profit. I want to start getting some money out of the company now. I want to start recouping my investments out of your company now, as opposed to waiting till your typical 3, 4, or 5 years, or sometimes even 7 years. We're beginning to see a lot more people demand for money off the table now than before. And I think just lastly would be around interest rates for investment. So typically when you have a preference, so most VC firms would typically take preference shares in exchange for, at least most VC firms that I know will typically take preference shares in exchange for stake in the business. And because of that, they typically will have interest rates in the company. They're beginning to see more increased interest rates, also just because of the uncertainty. So I think a lot more investors are reacting to the COVID and trying to ensure that even if they're investing in volatile markets or very risky markets. So of course Africa is a very risky market, but if you top that with inflation and top that with a pandemic like COVID, there's a lot more to consider, when you're thinking about this kind of investment. I think just one thing that I didn't touch on earlier was around valuation also. So we had seen that investors were demanding for lower valuation than they typically would ask for. And it's even now, it's still, investors are still demanding for seeing, because a lot more people are just coming out of COVID. But I think that investors also want to get into companies early at a lower valuation, because it then makes sense for them to be able to get more upside on those kind of deals. So those are, kind of the key changes that we've seen. Raymond, looks like you're frozen.
I'm still here. Sorry about that.
Okay.
Yeah. The other thing that comes out of what you've just said, how does the investor mix look like now that we are going through COVID and we've, post the COVID era? Do you think there's more capital coming from abroad now to Africa, or there's an Africa renaissance where, African investors are standing up to invest in these companies?
So I do think that, except in industries that the industry that I mentioned earlier, around crypto, around trade finance, around healthcare, around fintech, the fintech space, I don't see a lot of Western activity by foreign investors. But the other thing is investors are also looking to cash out. So they will take advantage of, the downturns, they take advantage of the economic crisis in any situation, because when you invest, when the economy is down, then hopefully you get an upside when things get better and when things improve. So there is some activity from foreign investors, because we have a couple of them who reach out to us and say, hey, I'm thinking of potentially investing in this company. What do you think? But I think something that we've also seen, which I personally am very excited about, is just more local activity from angel investors on the continent. We don't have as many VC firms, because it takes a lot to fundraise. Then there's not enough capital for fund managers, for African fund managers. Then they're not enough capital coming in for them. But we're beginning to see a lot more activity on the angel investment side. I think most African countries now have some, angel investment community that are trying to grow. And so I think that is something that entrepreneurs should tap into, because they want to invest, and the only way that they'll be able to do that is if they have access to more deals, because that was a previous complaint that was made, that there are not enough deals on the continent, or there are not enough good deals, investable deals on the continent. But I think that is something that, even just as professionals, that's something that we should champion and say. So for example, I think earlier on this week I was on a call with an incubator, and I was just telling them that they should reach out to, especially when you're at the early stage of your business. I think that taking VC financing may change the cost of your business. And so in those very early stages, you want to work with a partner that is patient and that can give you time to grow, right? So I think that the angel investment community is the best fit, for that. So I think that entrepreneurs should take absolute advantage of angel investors within their community, even outside of their community, because I know that more people are also looking to do more deals outside their country. But yeah, there is some activity on the western side, but not as much as to fulfill the demand of startup financing in Africa.
One thing that VCs will look out for in a company is scalability. So the question is, scale or not scale in this period? Are you looking for companies that are scalable? Is that something that you look out for anymore?
So especially when you're thinking about market risk, right? I think that is something that every investor will think about and say, if something happens to, for example, I'm going to take the naira, the Nigerian naira. If something happens in Nigeria, what other buffer can I have for my fund? Like, what happens if the naira goes nosedives? What happens to my money? That means that I lose the bulk of my money. So I think that is definitely something that investors will always look out for. I don't think COVID has um, impacted that anyway. I think that even more now, people want to have more upside than anything, because obviously you would have seen that there are some countries that were less affected by COVID than some other countries. There's some countries that handle it, countries that handle it properly. Some African countries handle it properly than even other Western countries. And there were also a lot of, African countries that were not as affected by COVID, even though it existed and killed a lot more people outside Africa. So I think that even now it has become more necessary to choose not to remain, in a particular country. But it also depends on the stage of your business, right? You cannot be at the very, very early stage and say you want to scale. It's like you have not even tackled the markets that your home markets is something that you should say, okay, you know what? I've gone to a certain extent where I feel like I've established a team. I have, a base here, and we can continue to grow. And then it's time for me to move to other markets. But I think that if you cannot say that you have significantly taken over a market, or you have significant market share in a country, then I don't think scaling is something that you should be thinking about. You should have it as one of your plans, because people will invest um, based on what they see, and they invest in the dream of what your business could potentially be. But if you decide or take active steps, to start to scale outside your immediate market without actually even owning something, then it just looks like you're not being very focused, or you're not being very true to yourself. Or if the plan was that your market was not really in your home country, because we've seen a lot of companies that maybe the founders are Ghanaian, but the business is in Nigeria, or is in South Africa, or is in Kenya or Uganda. So we've seen things like that. So those are kind of the only vagaries or distinctions that I'll make. But I think that people should own their market first of all, and then scale outside.
Okay, thank you so much. One thing that African startups are always challenged with is being able to exhibit an exit for investors. Now that we even have COVID in the mix, how are investors, mitigating their situation? How are exits looking like now, and how will they look like post-COVID to you?
So I think that for us, funny thing is, for us at AKVC, a lot of our terms have not changed. I think that we're just more cautious about the businesses that we invest in right now, than anything. So investing in like the businesses of the future, or investing in businesses that help to hopefully prevent this kind of pandemic. Investing in more education. Education is something that one of those trends, sectors that also came out of COVID, where a lot of people were working from home, and a lot of people were just studying from home. So people in the primary school and secondary school, and even so people in and even people, students from the university. So that also was one trend that came out of it. And the other thing that came out that I also did not mention was around uh, conferencing, like video conferencing. That I think that, of course, everyone knows the story about Zoom, and all the other video conferencing platforms, that we're trying to fight for a space. But I think people will still, I think that, aside from the terms that I mentioned earlier, where investors are getting more upside, because of course there's no guarantee that you get your money out. And then that's the thing about VC. The fact that you invested in a business doesn't mean that you're going to get your money out, of the business. It gives you, the opportunity to get an upside if, an exit does happen. And you would then be compensated for everything for all the years that you were there, and all the downturns, economic downturns, and everything that happened. But if that doesn't happen, if the exit doesn't happen, then of course you don't get anything. But aside from those terms, there's no guarantee that you will be able to exit. I know that some some companies are looking to do is set up maybe a UK business, that allows them to then register on the London Stock Exchange. I have seen some companies that are potentially exploring going IPO on the London Stock Exchange. We have seen some companies that are also looking to maybe set up in the US, just so that they have access to better. So there's this new thing about SPACs, which has always been there, but has not been used. But I think that because the whole process of going public was very tedious and very difficult, SPAC has now been seen as the potential exit for a lot of people. So I think those are the two most popular. But of course, I think that there will still be opportunities where people are coming to the continent, to acquire companies in Africa, because they see the opportunity. And that is also the reason why, foreign investors or even Africans will invest in this business, because there will always be an opportunity for those things. And I think that as long as people are living and people require those services, there will always be a need for more and more expansion by either by foreign companies looking to do business here, um, or even just people who require the service. I think that way, investors will be able to exit.
Okay. The other question is, startups are usually built by the founders or the talent they're able to, you know, acquire. How does the talent market look like now? Is it the right time to acquire exceptional talent, or should someone wait until the period has passed?
Um, So I think it mostly depends on the cash flow of the company. I think a lot of things depend on the cash flow, because I know that fundraising has been very difficult for a lot of companies at this time. Investors have been very careful and very extremely careful. Let me use that word, about funding companies at this time. So I'd say it depends on your cash flow. If you have enough cash flow and if you think that you can increasingly ramp up more sales by hiring more people, so I mean definitely go for it. I think that even talent is cheaper to hire now because a lot of people lost their jobs. A lot of really, really good talent, lost their jobs because companies were not doing as well, and companies had to let them go, and companies needed to survive, so they had to cut back on employee costs and staff costs. Um, so I think that actually now there's more talent out there to hire. There's greater talent that out there to hire, and you probably get them at decent fees or decent prices or costs compared to pre-COVID. But I think a lot more people are just open to, I just want to have something to do. I've been out of a job for 6 months, I've been out of a job for 3 months. I just would like to get out, or just be in front of a team and conversing with them. But like I said, it also depends on on your on how much runway you have. If you are recently fundraised, then of course, then go ahead to hire talent if you need them. But if you haven't fundraised, or you're in the process of fundraising and you're not quite sure how it will play out, I think that it is important for you to be able to just wait, and see how things go before you start to incur any more costs. The fact that Africa looks like it's coming out of COVID, hopefully we never we're never faced with this kind of situation again. But I think it's just better to err on the side of caution, where you have enough gas to help you run your business steadily, and you're growing steadily before you start to make any more expenses.
Thank you, Dami. So our time is fast spent, but I would like to give our guests a few minutes, probably 5 to 8 minutes, to ask any questions that they might have. Maybe, is there anyone that might have a question that wants to pass on to Dami on the call?
Hello.
Hi, Irene.
I have Demi. You spoke about something I'm interested in, and I was wondering, locals to invest in early stage businesses, and inclined to go for investments in real property or in fixed deposits. I keep wondering how you sell it to them if you've been involved in that kind of thing.
So we didn't hear the first couple of statements you said, so you probably need to repeat it.
Okay. You made a comment about the growth of the local angel investment community in Nigeria, and I'm interested in how you've been able to convince the Nigerians, maybe, what should I call them, the locals, to to make an investment into early stage businesses when
Yeah.
there are other options that are seen
Okay.
as a clearer through making an investment in a fixed deposit? I know how they've sold it to them.
Mm.
I think
Okay.
maybe let me just try to rephrase if it's better. Irene is asking how you've been able to convince, or how angel investors have been able to, how they've been convinced to invest in startup companies as opposed to investing in other things that have much less risk, like fixed deposit account or treasury bills, because there's so many other things they could do. How have they been able to get that, trust to be able to go ahead and do these investments in these companies? What has
Yeah.
encouraged them to do it?
Yeah. I think that having okay. So I think it started from just seeing a lot of startup activity within the space. So initially the Nigerian angel investment started, I think, as far back as I think 2014, 2016 thereabouts. Um, and there was just this boom of startups who had this very good businesses, and were looking to for financing, but that has always been there, but like you said, they would prefer to invest in, like you said, real estate, invest in fixed deposits, and not invest in those companies. But I think more and more people got very comfortable with investing in these companies when you see exits. When you see an exit, so your typical fixed deposit or real estate company will not give you maybe 10 times your money in 2 years. It definitely will not give you 5 times your money. Um, but I think when more and more people see exits that have been done, and see a lot more activities, then they begin to see that okay, there's a lot to there's so much more that we can do in supporting our local startups, than just investing in places where we stay comfortable. And I think the other thing is also just you see an entrepreneur that is passionate, and especially if you're a person who has built your own company from ground up, you see them as, okay, this was who I was maybe 30 years ago, 20 years ago. What would I have wanted someone who was in a similar position to have done to me, if I came to them? So I think there's been a lot of, and the truth is, when angel investing started in Nigeria, a lot of people lost their money, a lot of angels lost their money, and a lot of them actually just backtracked and said, we're not doing this again. But I think that there has been more education around angel investing, more education around venture capital, and more, I would say, venture capital investors investing in the companies that the angel investors had invested in, previously. So if an angel, or when an angel investor makes an investment into a business, maybe 2 years down the line, a venture capital company comes into the space and gives you a higher multiple on your valuation, and that means that you've made sometimes even 20 times the money that you have invested. And that being able to make that amount of money within a short time gives you the pleasure to want to do more, to want to make more of this kind of investment. So I would say that companies like the very popular companies, Flutterwave, Paystack, Minds.io, Lifebank, some of our portfolio companies, where we had angel investors. The fact that the ability to be able to get more returns on the business that they invested in just made it an easy sell for them to say, okay, you know what, this is something that we should really be doing. Plus the fact that it was important to support local investors, because what then started happening was you would see that we had more Western investors come into the space, and take all the money that local investors could have been a part of. So now there's been more local angel investment activity, and I think that even just around Africa, there has been a significant traction of local angel investors who are looking to support local startups.
Thank you so much, Dami. Like I mentioned, our time is fast spent.
Yeah.
Maybe if we have time for one more question, we can have it. But otherwise, if we don't have any other question, we can call it an afternoon.
That's fine.
For you, Dami. Thanks again for being able to join us this morning. We appreciate it. I know it's too early in the morning there, but thanks for making the time to be here with us.